Consult Group, which has been launching brands into retail for over 30 years, has poured all of its expertise into the Retail Excellence Program so that yours can be next. This online learning program is an easy-to-follow course that helps you get into more retailers sooner. Sign up by going to www.retailexcellence.co. Once again, that's www.retailexcellence.co.
It always has been a pretty stable commodity. It's never gone to zero, and it can only go higher, to be honest. And as the energy demand increases because global economies are recovering and people, get out of their homes and start to travel again, I don't see much downside to investing in energy stocks at all.
On this episode of Early Bird, James Hill, CEO of MCF Energy. James joins the podcast today to talk about oil and gas stocks in 2023, including the current state of the sector and why he expects demand for energy to grow this year. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, James, welcome to the Early Bird podcast. How are you doing?
I'm doing well, Stephen. How are you? Thank you for inviting me.
Well, thank you for coming on. I appreciate it. We're going to be talking about the oil and gas industry, especially what it means for investors. You are the CEO of MCF Energy, publicly traded energy company, so we're going to be talking about that. But before we do that, James, real quick, in like 30 seconds, how would you describe your past background for the audience? What should the audience know about you and your past?
I trained as a geologist, got a master's degree in geology, worked in the energy industry for over 45 years, had extensive training in various aspects, both geological and geophysical, which is, of course, remote sensing. I've been involved in many exploration and production projects, and I've worked for both major and minor oil companies for my entire career.
Yeah, your background's great, especially for this topic. Oil and gas companies had a tremendous year in the public markets in 2022, whereas most other stocks had a down year. Oil and gas companies had a great year, one of their best years in decades in terms of the stock price going up. Obviously, as a CEO of a publicly traded energy company, you're probably pretty bullish about where the energy space is right now, right?
Well, our government has definitely helped out with that by depleting the Strategic Petroleum Reserve. They've depleted it by almost 50% during this energy crisis time to try and control the price of oil, and been marginally successful at doing that. The energy sector has been so robust because right now economies are recovering. People are getting out of their homes, their COVID lockdowns. They're going to want to go places. They're going to want to do things. And I don't see this slowing down at all. Not only that, but China has been in a severe COVID lockdown for quite a while now, and they're finally starting to open up. So the demand for energy continues to increase and continues to become stronger and stronger as these economies recover.
Yeah, I can see why, this might be a good time for energy. What is it about energy stocks in particular that you think investors might appreciate about them? There are so many there are a couple of advantages. They tend to be a bit more safer than other stocks. They're defensive. Sometimes people would refer to them. Some energy stocks have dividends. What do you think is the sort of the overall advantage when it comes to energy stocks?
It's basically the fact that it's a commodity that everybody needs and continues to need. The idea of an energy transition is something that we recognize going towards renewables, but for the foreseeable future, oil and gas is going to be the bridge that's required to keep society functioning, and the demand for gas, especially, is only increasing. Europe has just declared natural gas a transition fuel and green in nature, which of course removes a lot of hurdles as far as getting things done in Europe, which is where our focus is at the moment.
Mm.
So, really it's the continued demand that you see moving forward in the future, because it's not just personal use in driving your cars, but so many industries rely on oil and gas, and so many manufacturing processes like plastics and even lipstick uses hydrocarbons.
Oh yeah, it's got wide implications beyond just basic transportation. You're absolutely correct on that. Going into the second quarter of 2023, that'll be just a few weeks from now. We're still here wrapping up the first quarter of 2023. What are some of the big issues right now in the energy sector that you think stock investors should be aware of? Are there any major issues that are sort of looming above that we should really know about?
Well, our government here in the United States is definitely hostile to continuing development of oil and gas, which of course means that the price is not going to come down very much.
What makes you say that it's
The
hostile? Just curious.
Well, President Biden just denied several 100,000 acres of prospective oil and gas, areas in Alaska.
Hmm.
Has just denied access to those. At a time when energy is needed the most and the prices are punishing the people the most, the current administration is doing everything it can to restrict development of at least domestic oil and gas. We aren't seeing this. We aren't seeing this in Europe, believe me.
So I know that permits for oil and gas drilling on public lands have started to increase the past year or two. Um, I don't know what you're seeing, but it seems like in the U.S. at least, there are more permits going out for oil and gas drilling. So shouldn't that be sort of the government helping the energy sector? Because that's what it looks like to me.
Well, they really aren't helping very much. The increase in number of permits is related to the price. The higher the price, the more companies are going to get out and attempt to develop resources.
Hmm.
But especially here in California, things are quite bleak when it comes to try and to do just about anything outside of established oil field boundaries.
Got it. So certainly these are big issues domestically. Around the globe, obviously the war in Europe, in Ukraine, that is still a major issue that's impacting this industry. How do you see that playing a role in either the price of energy or just the energy sector in general in 2023?
I basically have explored Europe, which has been a primary focus for me for over 10 years.
Mm.
And there's been a major change in the European attitude towards exploration in Europe. The countries had been drunk on cheap Russian gas for so long that all of the opportunities to develop their own energy resources just went by the wayside.
Mm.
They really were just died on the vine, more or less. So what's happened now, of course, is that the European governments are realizing that your safest energy resources, those that really are needed to keep not just people's homes warm, but factories running and transportation hubs working, is those energy supplies within your own borders. And it's the European Union has just declared natural gas, as I mentioned, a transition fuel and green. So MCF's focus is on development of natural gas resources within Europe, and there are many good prospects within Europe, which, as I have mentioned, have just gone wanting because there's just been no capital to develop these assets.
Got it. And so, from an investor standpoint, I bet what we're seeing in Europe, what you just brought up, that might make investing in energy stocks a bit more enticing. It looks like, especially as the year goes on, right?
Yes, especially in European countries, because the desire is there. And the idea that Russia has used energy as a weapon has really caused them to open their eyes and realize that they have to have a domestic supply which is secure. Mm-hmm. And MCF, our whole mantra has been to be a first mover in this sector. If to give investors the in well a entry into the European market, where things are, the price of energy in Europe is much higher than it is in the United States.
You're absolutely right. And so I guess looking at oil stocks, got to go with the ones with some European or at least global exposure, as opposed to just domestic exposure. It looks like.
Oh, absolutely. Diversity is always good. But right now for us, the opportunities appear to be within the European theater. It's like I said, there's a lot of extremely good opportunities that just have that are now available to us that weren't available to us before. So we're very excited about our prospects.
Nice. When we return, we'll hear from James about how investors should approach oil and gas stocks, especially if there's a recession, and how to pick individual stocks in this industry. But first, let me tell you how you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, James, today we're talking about oil and gas and energy stocks in 2023. So far, we've discussed a bit of an overlook of the industry and why these types of stocks might be favorable to investors. I wanted to play devil's advocate for a second. There's an argument to be made, a bullish argument, that this is not the right time for oil and gas stocks. For example, crude oil prices continue to drop a bit, especially if there are concerns about a global recession. Are you concerned at all from an investor standpoint that this may be a time to avoid these stocks, to stay away from oil and gas stocks?
Well, I don't think so, because there is going to be a floor in energy prices. With the depletion of the strategic petroleum reserve the way it is, when prices do fall, the government should be buying oil, which will give a floor price to it. It's not going to fall too far down, because the government is going to have to replace over 350 million barrels of oil that they've sold off into the strategic petroleum reserve. So that provides a floor for the price of energy. For me, moving forward, it's going to take them a while to replace 350 million barrels. And so, and of course, energy prices have always been volatile. They've always followed the market, but basically, it always has been a pretty stable commodity. It's never gone to zero, and it can only go higher, to be honest. And as the energy demand increases, because global economies are recovering and people get out of their homes and start to travel again, I don't see much downside to investing in energy stocks at all.
So if there was a hypothetical recession later this year, later in 2023, you still think that the oil and gas space is a good place for investors to go?
Well, yeah, because energy, as I mentioned, the usage goes up and down, and the price goes up and down as well. But the the usage is never going to go to zero. I mean, there's always going to be a demand. It's like food. There's always a demand for food, and there'll always be a demand for energy, not just to heat your home and drive your cars, but as I mentioned, industries use natural gas and petrochemicals to make just about everything we use.
Mm.
So it's like I said, the price is never going to go to zero.
You're right about that. That's sort of where things are right now. From an investor's standpoint, one way to get exposure to the oil and gas sector is obviously through index funds, exchange traded funds, ETFs, things of that nature. I always say, speak to a financial advisor before you're making stock picks. Given the state of things in oil and gas, it is volatile. Would it make sense to just go with one of those index funds instead of exploring different stocks, or do you think the opposite is true? Exploring individual stocks might be a better way for investors to sort of pursue this category.
Well, I'm not an investment advisor, but when you invest in an ETF and things like that, they spread your investment over many different companies in many different areas, and some completely different sectors, whether it be geothermal or gas or oil or even hydrogen. Mm-hmm. But when you invest in an individual stock, you're investing in a play. You're investing in an area where the company is focused. For instance, MCF, we wanted to be the first mover in Europe. And from all intents and purposes, we are. We reviewed over 20 different projects. We selected 2 out of that 20 that we are moving forward with, and we're very pleased with those projects. So from an investor standpoint, if you want to spread your risk, then ETFs and those kind of vehicles are what you want to put your money in. On the other hand, if you want to invest in an area or a particular company because you like the management or you like the areas that they're working or their technologies, then you have to go with individual companies.
Mm. So sticking on that topic, individual stocks, individual companies, what sort of advice would you have to investors when it comes to evaluating oil and gas stocks?
Basically, you've got to look at the management team. It's really, really critical to have a good, solid, experienced management team. You've got to look at, of course, their financials, just how strong they are. You have to look at the projects that they're doing and how long is it going to take for those projects to come to profitability. We've looked at some projects where we've turned them down because production wouldn't happen until 2027. So you can't throw out, a large amount of money into a project that's not gonna provide you with any cash flow for 3 years. That's just not a smart thing to do. It might be for Chevron and Exxon, but for an aggressive, small cap company, you want to have things that are going to return an investment to your investors as quickly as possible.
Real quick, I know you just mentioned small cap, so I take it in the oil and gas space, obviously with your company, but in general, you think this might be a good time to look at these small caps in oil and gas as opposed to some of those larger names that you mentioned?
Well, your returns on a Chevron, I don't know what they're trading at, but let's just say they're trading at $50. Mm-hmm. If they make a discovery of 1 billion barrels, that's going to move their share price about 55 cents. However, if you get into a small cap company that's trading at, say, 50 cents or $1, if they discover 1 billion barrels, then that stock's going to go to 10. So, yes, the risk is higher with small caps, but your potential returns are much higher. So, if you judge the risks of your portfolio and don't commit too much of your portfolio to some of these riskier but much higher potential return stocks, I'm sure you'll do well.
Yeah, high risk, high reward for some of these names for sure. And then finally, I guess with your company, you have two assets, Austria and Germany, recently, right?
Correct. Yes. The Austrian opportunity is a well which we're going to be drilling hopefully by September.
Mm-hmm.
It's a 2,000-meter well, or about 6,000 feet. The geologic structure that can potentially hold natural gas covers over 100 square kilometers. The thing is very large.
Mm-hmm.
And in the independent reserve reports give us 500 billion cubic feet of potential reserves. And if things really go crazy and the gods truly favor us, it could be 1 trillion cubic feet of natural gas. And I can spend, less than 4 million euros to prove up 1 trillion cubic feet of natural gas. That's kind of a no-brainer. Now, on the other hand, it's a very high-risk play. There's no doubt about it. But it's a true company maker, assuming just that one hits. No. Now, the other one in Germany that we selected, we decided to balance out our portfolio, is an established gas field in Germany. There's been 3 wells that confirm the presence of gas. The reason why it hasn't been developed to this point has been gas prices and the fact that it's called low caloric gas. There's a significant amount of nitrogen associated in the accumulation. However, the stripping out of the nitrogen is a well-established technology, and it's something that we've determined to be quite economic to do. And the real kicker is I've got 0.2% helium associated with the gas, and helium is an extremely valuable gas. So this was a big reason why we moved on this particular project as well, because it was a proven asset, and we can see the capital necessary to bring that project moving forward and to bring it into productivity.
Nice. That's wonderful. James, thank you so much for coming on the Early Bird podcast, talking about your company and the larger oil and gas industry, especially as it relates to stock investors in 2023. Before we wrap up the discussion, I just have one final question, and it's the most important question for today's episode. That question for you, James, is if you could eliminate one thing from your daily routine, what would it be and why?
Sleep. When you're in a very aggressive environment, especially when your assets are on the other side of the planet, you have a tendency to get up in the middle of the night and return emails or return calls and that sort of thing. I don't really mean to eliminate sleep, but the idea is that when things are happening so fast and market conditions are moving so quickly, it pays to get up a little earlier and go to sleep a little later, if you know what I mean.
Yeah, I understand that. Thank you again to James Hill for sharing your insights on oil and gas stocks. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.